In my various research projects, I have found an exciting way to own quality, well-maintained farmland which has growth potential to benefit in capital growth plus regular income. This is Gladstone Land Corporation, a farmland real estate investment trust. This is the investor's presentation taken from Gladstone's website, which I've read through and point out some reasons why you should look to invest in farmland. It owns farmland and farm related facilities leased to high quality farmers on a triple net basis, meaning the farmer pays the rent, the insurance, maintenance, and taxes. So basically, you own the land, give it to the farmer, and they pay you on a regular basis. Currently, Gladstone owns 169 farms with approximately 116,000 total acres in 15 states of America, over 45,000 acre feet of banked water in California. The valuation and their acreage is currently 100% leased. That's all out on leased. It primarily buys farmland used to grow healthy foods such as fruits, vegetables and nuts. So there's always been a demand for this high value food. Primary focus, annual fresh products, permanent crops. Territory focus, grains and other crops. We believe that farmland growing fresh produce, e.g. fruit and vegetables and certain permanent crops, blueberries and nuts, is a superior investment over land growing commodity crops such as corn, wheat and soy. This is due to high profitability and rental income, lower price volatility, lower government dependency, lower storage costs, location typically closer to major urban populations, thus higher development potential. This is an interesting fact. US farmland, decreasing supply, increasing demand. If you get that, valuations go up. And this is a graph showing how over a period of time the availability of farmland has decreased. It's a low volatility and correlation and strong returns. US farmland has experienced lower volatility. That means fluctuations in price and particular problems, ups and downs, than both the S&P 500, the MSCI US REIT index, while also exhibiting low correlation to other major asset classes. So it's a nice, stable, regular growing investment. US farmland has experienced stronger returns and lower volatility than both the MSCI US REIT index and the S&P 500. So stronger returns than the S&P 500. The annual for farmland market opportunity, the primary focus. Short-lived row crops generally planted annually. These are beans, blackberries, cabbages, cantaloupes, celery, lettuces, melons, peas, peppers, radicchio, raspberries, strawberries, sweet corn, tomatoes and other leafy produce. There's 3,000 top-tier farms and the market value is $10.5 billion. Permanent crops, primary focus. Long-lived bushes, orchard trees and vines, generally planted every 20 plus years. For example, almonds, apples, avocados, blueberries, cherries, figs, grapes, lemons, oranges, peaches, pears, pecans, pistachios, plums and walnuts. These are all great healthy foods. So remember, you are encouraging healthy eating while making some good profits. Grains and other crops. Short-lived row crops generally planted annually. Barley, beet, corn, cotton, rice, soybean, sugar cane and wheat. The investment focus of Gladstone is we focus on acquiring high-value farmland that we believe will generate above average revenues and profits and generally has the following characteristics. Adequate and clean water supply with fertile soil that is rich in nutrients. Now, this is most important. If you haven't got water, you've got problems, and especially with global warming happening. So that is something that Gladstone makes sure that they do have a clean water supply. Excellent weather combined with long growing seasons that provide adequate sunshine and low wind conditions. Location: an established rental market with a prominent farming presence and an abundance of strong operators. So you're working in an area that is specialised in farming. We believe fresh produce land has lower risk than commodity crop land. Water access: commodity crops usually depend solely on rain or water. And commodity crops are such as mentioned, wheat, corn, barley, sugar beets and so forth, or beets. Whereas fresh produce crops are typically irrigated from farm wells and county supplied water. Almost all of our farms have their own water supply, so you're in control of the water. Whereas on commodity crops, you're at the whims of the weather. So if the weather doesn't perform correctly, your crop yield can be greatly adjusted. Price volatility: commodity cropland values largely depend on global crop market prices, making them more volatile, whereas fresh produce farmland is generally more insulated due to the crops being grown and mostly consumed within the US market. Government dependency: commodity crops depend on government subsidies and tariffs for protection that are subject to change. Storage costs: there are added costs to dry and store commodity crops such as corn and barley, whereas fresh produce is usually consumed within days, picked, packed and sold. Rents: fresh produce farmland has higher rental rates than commodity crop farmland, even though commodity crops carry higher risks. Investor focus summary: we seek to acquire high value farmland and farm related facilities that we lease to corporate and independent farmers, primarily on a triple net lease basis. The property types are high value cropland with on-site water sources. Locations: regions with established rental markets and an abundance of strong operators. So you're actually buying your farmland in areas where everyone is an experienced farmers, and it's not a new industry. The main focus is annual fresh produce, most fruits and vegetables, and certain permanent crops, blueberries, nuts, etc. And the size of transaction, or the value of land that will be bought, is 2 million to 50 million plus. The lease terms back to the farmers is generally 5 to 10 years plus, with annual escalators and upward market resets or participation features. Rental payments, fixed cash rent or fixed cash rent plus a percentage of a farmer's gross revenue. Participating leases, which can be quite interesting. You're sharing the farmer's profit. Tenant farmers, tenants with strong operating histories and substantial farming resources. So you only rent out to farmers who know what they're doing. Fresh produce continued to outpace inflation. From 1980 through to 2022, the fresh fruit and vegetable segment of the food and beverage category increased by 378%, from 81.8 to 391.3, which is 1.5 times greater than the increase in the overall annual food and beverage CPI over the same period. There's more demand for fresh, wholesome food. Graphic focus and diversity. This is a map of the US, and you can see where Gladstone own farms. And you've got some on the west coast, central, and on the east coast. And it's the number of farms in different states of America. Selected properties. This is an example of the properties that Gladstone own. There's California, which is pistachio nuts. This is these trees are planted and grown over a period of time. Arvin, California, almond trees. Almonds are very popular nut food. Oakeby, Florida, cabbages. These are planted every year. They're cut, packed and sold. Westernville, California, raspberries. This is a crop, bushes which are grown over a long period of time and they're harvested regularly. Strawberries, and we've got snap peas. And if we click on one of these as an example, the pistachios, let's just give you an example. California farmland appreciation. This shows you how the price of farmland has increased per acre. You go back to 2000, if you bought an acre of land, that would cost you just over $5,000, say between $5,000 and $7,000. And you can see how the valuation or the value of agricultural land has steadily risen up till now. We're now looking at 2022, even though we are in 23. The valuation of an acre of farmland is $17,000 or about $18,000. Prime coastal California cropland has appreciated in value by 134%. So I just show you, and this is irrigated cropland, but this shows you how the price of California farmland has increased. The underwriting process, deal-focused underwriting process for each new investment. So before the company invests, they do make sure they know what they are putting their money into. Leveraging our management team's extensive experience in credit underwriting and knowledge of farmland. Due diligence on the farm. Appraisal on each property by an independent licensed expert in farmland appraising, so there's no bias. Visit property, ensure that the farm is an active rental market. Go there and actually see what you're buying, physically inspect the asset. Water and well testing to determine the availability of water. Don't just take someone's word that the water is available. You physically go and test it and have it clear in your mind that it does exist and it is suitable. Same for soil. And zoning and title report to ensure there is no deed problems. Make sure that what you're buying legally is available for sale and there are no clauses. Due diligence on the tenant, detailed underwriting of the farming tenant's operations. So we're making sure the tenant knows what he's doing and is capable of paying the rent and earning money. Investigate the management of the farming operation. Determine the tenant's ability to sell their crops. Make sure they can actually sell the crops to earn a profit to pay the rent. Evaluate the labour needs of the tenant. Evaluate the probability of the tenant missing future rental payments, probability of default. Growth opportunity. Farm ownership, a fragmented industry. Total US farmland value is 2.9 trillion. Approximately 62% of US farm operators are over 55 years old, and the average age is 58. 40% of all US farm acreage leased to and operated by non-owners. So there's a high percentage of farms are run by non-owners. Company performance, portfolio growth. This is how Gladstone have performed. We have grown the value of our farmland holdings from $75 million at their initiation of when they went public in 2013 to approximately $1.6 billion today. The blue indicates total portfolio net book value, and the yellow is total portfolio fair value, and that's the total acreage line. So over a period of time, the ownership of acreage has gone up and the value of the asset has gone up. Company performance, earnings growth. This is how the company's performed on earnings. This is when the leases expire. Obviously, you've got to have your land leased out, so you get an income. So when the lease expires, you've got to renew the lease with the existing tenant, or go out to market and get a new tenant. Valuation of farms. While most REITs do not disclose the fair value of their properties, we provide updated valuations of our farms in our quarterly filings with the SEC to show the estimated fair value of our farmland portfolio. We will generally have each of our farms appraised by an independent third-party agricultural appraiser on an annual basis. So the assets that Gladstone own are checked and verified by an independent once a year, and us as the investors, this gives us the reassurance that what we're investing in is what we're investing in, using a combination of full appraisal and restricted use or desktop appraisals, all of which are US PAP compliant. We use appraisers who are certified by a Society of Agricultural Appraisers and are trained in the methods used by farm appraisers. As of June 2023, the fair value of our farmland portfolio was determined as following. Purchase price, number of farms 4, $37.3 million. Percentage of total fair value 2.4. So this indicates the internal valuations and the external valuations. Consistent occupancy levels. This is quite an interesting one. From 2013 to today, the percentage of farms that are occupied or leased out started off 100%, and there's been not, when we do have a year when the farms are unoccupied, it only equates, the lowest so far has been 99.5%, and that was in 2019. And there's a statement here, which is quite an interesting one. We believe the relative safety of farmland as an overall asset class allows us to borrow at levels that enhance returns to our shareholders while maintaining the security provided by a strong and stable asset base. And this is year over year, same property rental income growth rates. This is how much average annual same property rent growth run at 3%. So basically over the 10-year period, rents on average have gone up by 3%. Capital structure overview. Current capital structure. 38% is common equity. 21% is preferred equity. 3% is preferred stock, and 36% is net fixed rate debt. And this is a list of the managers. The chairman and chief executive officer is David Gladstone, chairman and CEO since the inception of the company, former owner of Coastal Berry, one of the largest strawberry farm operations in California, 1997 to 2004. Former chairman of American Capital, Nasdaq ACAS, and former chairman and CEO of Allied Capital Corporation, 1974 to 1997. Over 30 years of experience in the farming industry. What else have we got here? We've got John Kent, head of capital markets, joined Gladstone in 2017, formerly in investment banking at UBS, Nomura and Macquarie. Over 20 years experience in capital markets, treasurer. So good solid base of management. Gladstone Land Deal Team. These are the people who go out and do the deals. We've got here Executive Vice President of West Coast Operations, fifth generation farmer focused on coastal California, built and managed a 25 million strawberry and raspberry farming operation, recent chairman of California Strawberry Commission and Ventura County Agricultural Association. So really strong in-depth people here. Bill Frisbee, Executive Vice President of East Coast Operations, joined Gladstone Management in 2006, helped take Gladstone Land public in 2013, responsible for sourcing and executing farm land executions across the USA with focus on the East Coast, former chairman of NCREIF Farmland Index. Joey Van Wingerden, Managing Director Mid-Atlantic, so he looks after the centre of the USA. He joined in 2013, responsible for underwriting and sourcing farmland acquisition across the USA with a focus on permanent crops and the Mid-Atlantic. Multi-generation greenhouse and nursery background, board member of Fresh to Go Growers. Real strong background of the people who go out and put the deals together. So we've got here steady and secure income from farmland that has been rented for decades due to decrease in number of farms, partially as a result of conversion to suburban and other uses. Cash returns, current pre-share cash distribution run rate on our common stock is $0.0462 per month or $0.05544 per year. What we've got here, we've got management team and ownership. Management has more than 100 combined years of industry experience and owns approximately 9% of our common stock. So the managers have got skin in the game, which give you great faith in the company. Inflation hedge, consistent increase in the value of farmland and rents received due to population growth, increased demand for food, and the shrinking supply of farmland in the USA. so we're going to keep pace with inflation quite easily. Acquisition flexibility. The Gladstone can pay cash or offer tax-free exchanges with units of our operational partnership, so they can move quickly and have the funds to do so when acquiring new farms. With global population increasing and demand for food rising, farmland is expected to become more valuable. That's what prompted me to look to find ways I can easily get into investing, and this seems to be the best way. Owning stock in Gladstone land provides investors with diversification across 29 distinct growing regions, over 60 crop types, and 92 different unrelated tenants. So a nice diverse range. You've got 92 different tenants, 60 crop types, and 29 distinct regions. So that is my review of Gladstone land, and as I say, I'm going to invest, or have invested, in Gladstone land using the Trading 212 platform, which is available in the UK and Europe. There's also Free Trade, which is available in the UK and Europe. In the US, there are several three trading platforms. Robinhood comes to mind, and with Trading 212, there are no charges, and you can buy a minimum of one share a time. So we've got here one stock is worth 14.07. So we went to buy. The markets are closed at the moment. I'm doing this presentation on a Sunday, and the markets will open again on Monday. So go to buy. Number of shares, if we just put in one, and go to done. Market orders are executed at the best current available market price. Review order. This will be a market buy. Gladstone land, order type market buy, number of shares 1, £11.49, no commission charged. Send a buy order, and I have actually placed an order, and I'll be an investor in Gladstone land. Another actually checking out my viability of thinking if this is a good investment. On here it gives some stats which you may find quite interesting, easily obtainable. The 52-week range, this is the valuation of a stock. The lowest it's been over a 52-week period is $13.59, highest is $22.17. Current valuation is 14, so we're at the lower end, so there's a great deal of potential for the stock to rise in price. The dividend yield, this is the payout that the REIT gives you, is 3.94%, so that's a nice little income. Then if we look at more ratios, per share, management effectiveness, financial strength. I think it's financial strength. I think it's here. No, it's not margins. Our valuations. If we go to valuations, you got price to earnings ratio, which is 56%, which is quite high. That basically means that if you bought one share, it would take 56 years of earnings to recoup the value of what you paid for the share. But that's only an approximation guide. That's not a here and end all reason why you should or shouldn't invest in any particular stock. One thing I do like to look at is the price to book valuation, and this is 0.7 or 0.69 depending over what period of time you're looking at it. So what they're saying is the valuation of all the assets on the books is valued at 1, and you're actually paying an equivalent per stock of only 0.7. So you're buying essentially 70 cents worth of a company, no, a $1 worth of a company for 70 cents. So this makes absolute sense. As you say, you go into a shop and say, can I have $1, please? And they say, yes, that'll be 70 cents. So that's another reason why I'm investing. But the real reason is it's farmland, scarce resource. I've always wanted to get into farming. I've struggled to find ways, but if you invest in Gladstone, who invests solely in the USA, good, secure, stable economy, not like China or one of these emerging markets or third world countries. You know where you're investing, you know what you're doing. There's ready market, so that's why I'm investing in Gladstone. I hope you found this interesting, this presentation. Probably one of the longest ones I've ever done, but well worth doing. Any questions or comments, please, by all means, send them to me. You can hopefully watching this on YouTube or my website. Until next time, I really do bid you a successful investing adventure.